Bank's numbers flashing on your screen. I'm going to quickly read some numbers out so that we get a sense of where we are standing. Your provisions number has come in at 3,154 crore rupees. Your net profit has come in at 16,736 crore rupees. Just a shade below what we were expecting at roughly 17,000 crore. So not a big miss or not a miss at all, largely in line it seems the set. You're also looking at your net interest income number coming at 30,653 crore, which is again a decent number, 1.8% up on a QOQ basis, around an 8% growth on a YOY basis. Looking at operating expenses, you're seeing a bit of a spike when it comes to operating expenses. That's come in at 17,106 crore versus the 15,961 crore number same time last year. So you're seeing that number has inched up for sure. Your ROA number has come in at 0.47%, which is 1.88% on an annualized basis. I have with me Aditya Shah. You're seeing a spike on both the GNPA as well as the NNPA. The GNPA has gone up by roughly 3 or 4 basis points, and your NNPA has gone up by 5 basis points. So you're seeing those spikes coming through with regard to where asset quality is concerned. GNPA up exactly 6 basis points sequentially, to be absolutely precise there. Aditya, what's your sense with regard to the first cut numbers? Growth was slow, of course, but your net interest income number doing decently well.
Good afternoon, Ash.
Good afternoon.
Can you hear me?
Yes. You're audible, Aditya.
So once you look at the results, I think the results are very stable. I am looking at the provisions number at about 3,153 crores, which is fairly stable. The primary concern on HDFC will continue to remain the asset quality as well as the margins. All other numbers are very immaterial in my opinion. The asset quality is stable, even though there is a 6 basis point spike. But we expect every lender out there to report some increase in slippages as well as deterioration in asset quality. The provisions number is up from 2,700 crores last quarter, but it is lower than the number of last year. So it is fairly okay and decent. I've not been able to calculate the margins. I'm waiting for the entire press release to come in. But if there is any slight improvement in the margins as well, the market will really like it and the stock will move up. So all the question will now hang on the margins. Other than that, the results continue to be really good.
What's the sense with regard to your provisions number, Aditya? When you're looking at it sequentially, it's gone up from 2,700 odd crore to 3,100 odd crore. So your sense with regard to that number?
So Harsh, if you look at Kotak Bank as well, on Kotak Bank, the provision number did spike up and the asset quality did deteriorate. This is an industry-wide phenomenon where we are going through a phase where NPAs are rising, and HDFC Bank is also experiencing certain bit of deterioration. We need to ask them what was the NPA on the agri side of it. Seasonally weak quarter for the agri business, so that we need to concentrate on. And we need to also understand the commentary with respect to the micro lending, where a lot of deterioration has been seen. So net, yes, there has been a deterioration. Last quarter, the provisions were at 2,700 crores. This quarter, it is at about 3,400 crores. But seeing the size of HDFC Bank, I don't think that that's a problem. Market is not too much worried about the asset quality per se, because they already know HDFC Bank does have a good book that they really hold. The question is now how the margins will move with respect to the loans. If the bank will guide that they are going to accelerate the retail loan growth, since the LDR is now below 100%, the margins will automatically improve in the next 2 to 4 quarters. So that is something that is a question mark right now. I wait for the press release to have an opinion on that.
Aditya, this is Vishwanath coming in. I had a quick question. You said the margins are unlikely to move anywhere as such. I wanted to get your view, in the current environment where the expectation is that there's going to be a rate cut at some point in time in the next month or so, and the expectation is that eventually your yields on advances will come down therefore, and deposit repricing will likely take time. Do you expect any kind of reduction of margins then, therefore?
So Vishy, what happens is this mismatch between advances and deposit is a short-term thing. What investors in the HDFC Bank stock are really watching out for is long-term expansion of margins from 3.4% to about 4%, and that's where the real return on the stock really is. Of course, there will be a mismatch between the asset and liability when the rate cut really happens. I expect the rate cut as early as the next RBI meeting. So there could be a mismatch and a slower margin compression because of the mismatch could happen. But in my opinion, investors are not too much worried about that because it's a short-term phenomenon. Longer term, HDFC Bank, as the LDR starts to come in control, needs to accelerate the retail loan growth. And once the retail loan growth accelerates, the margin will come back to 4% where the investors want them to really be. So net-net, of course, this is a short-term concern for the bank. But longer term, what really matters is how the bank is sustainably able to expand their margins to 4%. Mind you, this quarter, Kotak was able to expand their margin by a couple of basis points, but that is very seasonal and very short-termish in nature. So longer term, that's the trigger for HDFC Bank stock to outperform the market and give sizable returns from here on. How sustainably the bank is able to expand back its margin to where it was pre-merger.
Quickly do you believe they can do that, Aditya?
Sorry?
How quickly do you think they can do that?
I think as the asset quality cycle has turned really bad, I think it will take minimum of 6 to 12 months from here on.
Oh.
The biggest positive from in this quarter's result is the LDR coming down below 100%. I think it is at about 99%. The first piece of the puzzle is now solved. The next piece of the puzzle will be now to aggressively focus on margin expansion and margin coming back. I don't think this happens before 6 to 12 months down the line. But I feel HDFC Bank is particularly on the right track. They've controlled down the advances in order to control the LDR. Now once that is controlled down, they will now focus on margins also. So the result is all about future commentary and where HDFC Bank is really headed. The numbers particularly are immaterial. I don't think that the stock price will move on numbers. It will particularly move on the management commentary that we hear at 6 p.m. from the bank.
Right, Aditya, on the asset quality front, you said things have deteriorated across the sector. To your mind, maybe, is there a turnaround at all you're expecting? You said about 6 to 7 months for the operational numbers to turn track, but as far as asset quality is concerned, do you think things could get worse from where they are at this point in time?
So if you look at RBL Bank's numbers, they were a horror number. You look at Kotak's microfinance numbers, they are also relatively bad. So the industry-wide upheaval of NPA is a reality of it. All banks are going to face this test. You cannot say that X bank is immune to it. Everybody who has a diversified book will face this. It is just that the larger banks with a better quality book will face a lower problem rather than an RBL bank who is particularly exposed to the unsecured side of it. So I don't feel that the 6 basis point up move in the gross NPA that HDFC Bank has seen is a concern to me. Where I would be concerned is that if the management comes and tells us that they are not able to control future NPAs and SMA 1 to book are really ballooning up, I would face a problem. But from Kotak's commentary, where Kotak was really very confident that asset quality is definitely under control, I don't think that for HDFC Bank also asset quality will be a problem. Of course, there will be a deterioration in asset quality, but the industry itself is experiencing that problem. So I don't feel a problem. And we've also not got a bifurcation of non-agri NPAs and agri NPAs. I feel seasonally this is a weak quarter for the agri side of it. So there could be a spike in NPAs. But from the provisions number, I don't see a problem. They've not made too many provisions, which could signal that they're not too much concerned about
previously, whenever HDFC Bank's management has made comment about asset quality, they've said 1.5 to 2% is where usually their worst performing area is. And we're coming close to that sort of danger area at this point in time. You think then that pass over above 1.5% is likely?